have tried almost every setups out there: SMC, ICT, support and resistance, price action, to mention but few. They worked for a while, but none gave me a consistent result until I discovered this approach. In this video, I'm breaking down this simple approach that turned my trading around with ray charts and ray proofs. But before we jump in, I want you to watch this clip to get a clue of what I am going to expose now.
The third rule is that I want to put my entries where the masses put their stops. Most people will put their stops at very predictable places. If you're an institutional trader, your job is to generate the liquidity to get into the position. Invariably, the market makers will not know where the stops are, or they couldn't be bothered to find out. But they know that most people will put their stop a tick or two below the last low.
The work of institutional traders is to generate liquidity, that is your money, before they enter a trade. So for them to enter a trade, they need your stop loss. This must be the reason why sometimes the market will hit your stop loss before going in your direction. This strategy I'm going to expose today can help you increase your winning rates. As a retail trader, your own work is to enter the trade when the big players are entering the trade and close when they are closing. So in this video, I'm going to show you a simple approach that can help you enter the trade when the big players are entering the trade. Otherwise, you'll be a liquidity to them. Without further ado, let's jump in. But before we do, I'm Jay Marije. I'm a Forex trader and I want to teach people how to trade like pro and also share my trading advice and experience with everyone. So all you have to do is to click the subscribe button, turn the notification bell on, and like this video so you can get notified whenever we drop a new video like this. And also don't forget to join our trading community. There we share trading tips, trading guides, and many things that can help you become a profitable trader. Without further ado, let's jump in.
Just like we mentioned earlier, this is just a trading approach that you can apply to different trading strategies so you can have high winning rates. And here we are going to start with how to apply it in demand and supply or other blocks. So in demand and supply, you have to wait for inducements. This will help you to confirm that the bigger institutions have removed liquidity or have taken liquidity and are ready to drive the price up or lower. And the second one is how to apply it in support and resistance. Here you have to wait for takeouts. Okay, so first we are going to start with demand and supply or order block. So if you want to trade this approach in demand and supply or order block, this is what you are going to do. If you have this level as your supply zone and are waiting for the price to come back to it before you sell, or you have it as your order block or whatever and you are waiting for the price to come back to it before you sell, I recommend you wait for inducement. Inducement is something that will cause traders to take action at the wrong level. So the big players will take their liquidity before driving the price lower or down. So something like this can happen. So this will not reach the zone before dropping. So those who don't have knowledge about this will start looking for selling opportunity at this wrong zone. Okay, so when the price comes, it will take them out and tap into the zone and then sell off. Meanwhile, those who put their set position here will be taken out for this big move occurs. So the best thing for trading supply or demand zone or order block or whatever is to wait for inducement. Now let's see a ray chart example. All right, this is 3P card. If you look at the overall structure, you see that we are in uptrend. So you will say, okay, let me look for buying opportunity or my demand zone or my order block zone. And if we zoom, you will see that this is a demand zone and this is a supply zone. Looking at this, why is this a demand zone? Because of this big bullish candle that rallied up with minimal retracement. So now where is our inducement? As you can see, when the price pulled up, it came down without touching it, then pull up again. Now this zone is our inducement. Now have to be taken out before the ray move occurs. And as you can see, here is when I took the trade. I actually placed my TP here, but I saw under supply zone at the 1 hour time frame. If you go to 1 hour time frame, this is a big bearish candle in 1 hour time frame. So the beginning of this bearish candle is our supply zone, so we mark it out as a supply zone. Earlier I planned to take my profits at this supply zone, but after I saw this supply zone, then I closed here. Now what did I do this trade? Here is our demand zone and here is our inducement, which needs to be taken out before the actual move starts. And as you can see, the price mitigated the demand zone and rallied up to the next supply zone. And as you can see, this supply zone as well, remember this did not reach this supply zone, so this is our actual investments. So you can still take your set position from this supply zone, down to this key level or to this demand zone. Why? Because here we have our supply zone and also we have inducement. This inducement needs to be taken out, and as you can see, there was some small candle range here, which means that some plan to take action here and they were taken out. Then the price rallied up to this supply zone before dropping. Now here is another supply zone in this same 1 hour time frame, but here we don't have inducement yet. So if I should take this trade from this supply zone, what I must see before I take the trade is something like a big rallied up, then down, then before the actual move. Then this one will be the inducement that need to be taken out before the remove occurs. Otherwise, I will expect the price to rally up to this supply zone that have many inducements, right, before dropping. So that is how to trade with demand or supply zone or with other block. Just mark them out and make sure you have your inducement that needs to be taken out before the actual move starts. Another example using other block on XAUUSD. Now as you can see here, we have big rally up, so we are in uptrend. So since we are in uptrend, you can decide to look for your bullish order block to take buys. So as you can see from here, we have our order block from this zone, but now when the price pulled up, it came back without touching the order block before breaking another structure. Now this one is our inducement. Why? Because it did not touch this order block before breaking another structure. So this will cause some traders to take action at this level. So the markets, the big players, will take them out before pushing the price higher. As you can see, since then the price have been moving higher. So if you took action after seeing inducement at this order block, you could have made at least 1:4 risk to reward. That is if it targets this psychological level at this place. So in other block or supply and demand zone, have your inducements. That inducement will cause some traders to take action at the wrong levels. So big players, we take them out before moving the price higher. That is for supply and demand zones and other blocks. Now to trade this approach using support and resistance zones, wait for fake outs. Now we are going to explain how you can catch big moves in support and resistance zones using these fake outs. Alright, if we have a level that price mitigated and pulled up, now came back to that level again, touch it and what, pull up. Now you can decide that this level 1 and 2, because of these two touches, this level now is now a support zone. Okay, so now how can you trade it? Because sometimes we can see the market come back to it the third time, and some people will put their buy positions immediately because they saw a small push up. But what the bigger institution see is they knew that your liquidity is here, some liquidity is here. So for them to pull the price up, they need to convince some people to take action here. Now make a fake out before pushing the price up. This will cause the liquidity here to be taken out and cause some actual fake outs that will lure many traders into taking actions in various ways before taking the price higher. So now why is this? Because there is some liquidity here. So the big players, they need to cause some fake outs here to take out those liquidities that was here and here before moving the price higher. This will cause many traders to take numerous actions here, and after that the market will rally up immediately. As you can see here in USDJPY, you have a first touch here and a second touch. Now you can see that this is a resistance zone because of this first touch and second touch. Okay, so before that, if you look at the overall market structure, you will see that it is bearish, and you say, okay, most of my trades I will be looking for selling positions. So if we come back to this level again, you see this is a first touch, second touch, and say it's a resistance zone. I says I'm looking for a sell position. I'll be taking action now. But as you can see, this is the third touch. Remember what I said, the big players, they will make the market to do as if it is moving. So some players will enter because they think the market is about to move. So they may put their entry immediately after it and put their stop above it. And as you can see, the market took them out and now rallied down. Why? Because the big players, they know that there were some liquidity here, and for them to enter the trade, you know, their rule is to generate liquidity before driving the price lower or above. So as you can see from here, they collected the liquidity here, and boom, throw the price down. So how could you have made money at this resistance zone? Here is how. You have to wait for a fake out or liquidity sweep. This is a real fake out at this level. Why is it a fake out? And how can you confirm or know a fake out? Actual breakouts should have a very bullish candle body that close above this place. But as you can see here, a real candle body did not close above the high. What we have there is just a sweep. So now after the sweep, the market fell immediately with very bearish candle, and this is where the fake outs have happened, and the big players must have collected liquidity and now ready to pull the price down. Now if you see this fake out and a very big bearish candle, that is when you should pull your trigger. So after the fake out, just wait for the market to retrace a bit, enter and put your stop loss above that high again. Now you can target at least 1:4, 1:5, depending on type of risk to reward you love targeting. If you targeted this key level, you will make profit, and if you targeted at least 1:4, 1:5, you see you still make profits. So in support and resistance, wait for liquidity sweep or fake outs. But in the minor supply zones or other block, you can wait for inducement. Using this approach, you can increase the winning rate. But understand that this fake outs and inducements doesn't happen in the market all the time. But if you can spot it, then it is a high quality setup. If you have a question, don't hesitate to drop it in the comment box. And for more trading tips like this, join our community. The link will be in the description of this video and also in the first comments. Thank you.
So when the price comes to your entry or to your point of interest, how can you enter with the institutional traders? The simple answer to this is be patient. Many beginners out there, what they do is any level they think is good, they press the buy or the sell button, and that is wrong. You have to allow the market to play its work. You have to allow the institutional traders to generate liquidity first before you enter the trades. You can do this by waiting for inducement or entering after liquidity sweep. I have showed some chart examples about this, and if you need more guide, make sure you click the subscribe button and join our Telegram community for more trading tips like this. And don't forget to drop your questions in the comment box. For now, goodbye, good luck.